Hey Dave and Claudeen, this is Alan. After getting your email last night, Dave, I thought I would just go through the spreadsheet a little bit with you and might answer some of the questions you sent. I am in version 4.9. I've already made some other changes um, to make it to remove some of the error messages that are unnecessary because it's looking at future periods that have not been data has not been entered for. But if you haven't looked at this tab here, cash flow assumptions, you might want to look at that. We may want to delete this. We may want to add more. I'm most concerned about the cash flow statement because it's clearly not GAAP, and um, we are making some pretty strong assumptions in order to do it automatically, because the cash flow statement has to be really done by hand to get it fully accurate. Also, here's the testing. If you go through these, you'll see how it affects the balance sheet, income statement, and cash flow statement. This was kind of a pain to put together because I had to back into my balance sheet, but it was valuable to me to see how everything was appearing on the cash flow statement to make sure it was appearing in the right place, especially when I hit June. I kind of threw everything into June, and everything seems to be working correctly. So here's the balance sheet. As you're aware, I grayed out like I did December because December is such a kind of a different month, the previous year. However, as argued, I tried to argue, I do think it's important, or at least let them make the decision whether or not to include it. Down here below and remember, I have increased what is they have to key in for owner's equity, and for the purpose of this has to do with trying to prove out retained earnings. And in order to prove out everything, these were the only inputs in addition to the balance sheet and income statement that I was requesting from the user to properly present things on the cash flow statement. Sales price of fixed assets sold, the gain or loss on sale of fixed assets. Now this is what's important on this, is that this tells us what the change in the fixed asset account is, as well as accumulated depreciation. So that's what causes all that to get trued up correctly. Amount of new notes obtained from the bank or from owners, just because unless we're just going to net that out. But I kind of like seeing, oh, these are the new notes and this is what we've paid on all the notes. So that's so that we can separately state payments versus new notes gained. And then here's the cash dividends paid to shareholders. I know that we haven't shown that before, and I know that when we were going through the Beacon CEO form, this was something that I always personally wanted to see, because you would see these low salaries from people, but we never saw the dividends they were paying to themselves, and I never got a real good feel of really how much people are drawing out of the business versus how much they're leaving in. And obviously this would cause that to show forth, but as long as you don't bring it up in that way, I don't think people would mind so much possibly presenting that. But this is necessary to prove out retained earnings, and that's what you spent a lot of time in your email talking about. So it's just a simple number: how much did you pay out this month? And then on the year to date one, it'll be how much has been paid out year to date. So anyway, that's the balance sheet. Income statement unchanged from what has already been developed, other than going all the way to net income. So I'm showing income taxes because that's a separate line in the cash flow statement. So other than that, it's the same. So we're starting off with net income, which is the number that a lot of people look at, obviously, because it's the final number. Then here's the cash flow statement. Now, in formatting this, just to let you know, there's a lot of detail in here that's hidden. That's what all these are. These pluses are. This is grouping. So if you want to go to a particular month and see the specific activity, you click on the plus, and then here's BD, where we're at in June, and this shows the workings of pulling numbers in to make this all work. So it's starting off with a change in financial position, then here adding back depreciation and dealing with the sales price of fixed assets, new notes, as well as retained earnings. So you go down and see all this, and then here's a lot of supplemental information. This is actually hidden normally, so it looks like this. There's the cash flow statement as it would be. And then if somebody wanted to see a particular month, they could click here and see it. Then they'd have to see the supplemental information that supports the numbers up here. They'd click here, and then down here is supporting information. This is where all the information is pulled forward from. Maybe not make a lot of sense to you, but it did to me when I was putting it together. The other way to make everything appear, a simple way, is to go to the Data tab, and you see all these pluses, and you just say Show Detail, and you click this, and it opens up every, highlight the spreadsheet, then say Show Detail. And then what this will do is this will open up everything. So every month is open, everything down at the bottom is open. So this is everything. So you can kind of see all that's going on. So you might want to take a look at that. I'm going to hide all that again and say Hide Detail. Now everything's hidden. And I don't know if this messes up the printing. No, it doesn't. So the printing is still working. So that's what the cash flow statement would look like. And one of the changes is now nothing appears if numbers haven't been entered. It's all blanked out. And then going back to the direct indirect. So cash flow statement, here's the operating activities. This is on the direct method, so it shows the receipts and what was paid. Again, these are more expense numbers rather than true cash flow because we don't have a detail enough in the balance sheet that shows the corresponding accrual counts to offset against this to true this number up for what was actually paid versus what was expensed. However, I still think it's very useful and not really going to be materially different, especially from month to month. Or unless somebody's really making some huge purchases like in packing material. I know my grandfather used to buy it by the trailer load at one point because he had so much volume, but I don't think many people do that today. And a trailer load of packing material would cost a fortune and it would really affect these numbers. But with the small amount of packing material people mostly order, then it's not going to materially affect this. But you are asking about the indirect method. Well, with a direct method, you always have to have the indirect statement of operating activities. And that's the only difference between direct and indirect is in the operating section, the investing and financing, which I know we're going to change this. But that's the same whether it's direct or indirect. So here is $9.642 million in June on operating, and down here $9.642 million in June. And this is the indirect method. So here's the proving out from net income showing the increase and decrease in trade receivables, whatever. So in showing both in one statement, you could say, well, look, I received $19 million from my customers this month. However, I had an increase of $2.5 million in my receivables. So I could have actually received, more. I didn't collect all the sales. I'm not going to go into that. Y'all understand that. But anyway, here is the indirect method. So when it prints out, here it is in a Adobe Acrobat printed out. So when it prints out, there's the operating activities. And then down here, you can see the same numbers, but just with the changes. And that's the way I had it set up. And then now these are blanked out when there's no numbers. So anyway, I hope that helps. And I will send you a notice about this in an email. Y'all take care.